Welcome everybody, my name is Koroush AK and this is the Market Meditations podcast. We chat with fascinating people from around the world to extract mindsets, routines, stories and habits to help you build richer lives. This episode is going to be about one of the most important parts of trading, and that is protecting your profits using correct risk management. We're going to go over my top 7 tips, various strategies that I've used myself that I hope can help you guys also. Before we jump into this episode, don't forget that I send hand-picked market news, insights, and education to over 6,000 traders and investors 3 times a week. To get access to this, all you have to do is sign up to KoroushAK.substack.com. Crypto markets are historically, as we all know, extremely volatile. And this week, for the first time in a while, we've seen some major downside. And as we always see, there's a lot of panic in social media. People really have no idea what to do next. Well, listen to this podcast and hopefully by the end of this, if you apply the lessons here, you won't have to panic next time the market drops like this. You'll know how to protect yourself from big downwards movements and through that, build long-term generational wealth, which is what we're all about on Market Meditations. The first tip is the most important one and almost encompasses every following tip, and that is to trade with a plan. You need to develop a complete trading or investing plan from entry to exit before you even open a position. So before you've even touched your position, you need to know exactly where you plan to exit the market. And that doesn't just include where you plan to take profit, that also includes where you plan to accept you may have made a mistake and need to accept your loss. Before you enter a position, you are least vulnerable to making an emotional mistake. Because after money is on the line, that's where we start to get greedy or fearful. If we've made a lot of money, we're susceptible to being very greedy. If we've lost a lot of money, we're susceptible to being fearful. But if we make our plan and decisions before we enter our position, then we don't have to make important, difficult decisions while subject to greed or fear. The actionable insights for you to take away from this is spend some time educating yourself and understanding how to develop a trading or investing plan. Then test it extensively to make sure it's actually a plan that works. And then once you've got data backing your plan, start applying it. Following on from this, we're going to go on to tip number 2, and that is to always trade with a stop loss. Now, a stop loss can happen in various forms. The simplest form is to simply place a stop loss order on an exchange. This means that once you've lost a certain amount, the exchange will execute and take you out of your position. There's other ways to have a stop loss in place. For example, you could enter with a very small position size that you're willing to let go to zero. This is also a means of placing a stop loss even though you don't have that stop loss order in place. If you trade without a stop loss, you are exposed to virtually unlimited risk. Remember, your downside is limited. Once you hit 0%, it's all gone. Even if you lose 50% of your portfolio, you're going to need to double that to get back your money. So you really need to protect yourself from downside much more than you need to maximize your upside. Takeaway points here would be, remember, always have your stop loss in place and do your risk calculations before you enter the trade. The next tip is to keep leverage to a minimum. 99% of people listening to this podcast right now should avoid high leverage. You're going to hear me say this a lot. Because upside is unlimited and downside is limited, leverage often makes you reach your downside faster. Now, there is a caveat to this. Leverage can be your friend. For example, you can use leverage to minimize your counterparty risk. What this means is instead of putting on 100K onto an exchange and trading without leverage, you can keep 90K in cold storage or somewhere safer and then only put 10K on the exchange and trade with 10x leverage. The problem arises when people put 100K on the exchange, which is all their money, and then use 10x leverage on top of that, and now they're really overexposed and probably going to get liquidated very quickly. The next tip, which most people listening to this are employing to some degree, is to stay on top of the market. Find trusted sources of information that can consistently bring you valuable insights on the market. And what this does is it gives you a discretionary edge. When you're trying to make a trading decision, you're far more informed than a person who doesn't know what's going on in the market. The other side to this would be that if you're getting information from the wrong sources, say unreliable news sources or influencers that are just shilling you their bags without having done any research into it, it can turn in the other direction. But I'd like to confidently say that Market Meditations, our podcast and newsletter, is one of the best sources out there for cryptocurrencies. And we're going to continue to improve and bring you guys information to keep you on top of the market and help give you those discretionary edges. So you have some insight as to what to do when the market structure changes and things aren't quite the parabolic bull market they are right now. The next tip is to trade with an edge. You can't just randomly buy and sell. You need to have positive expected value. What this means is you enter a trade, you know how much you stand to win, you know how much you stand to lose, and you also know the probability of winning and losing based on your previous trades and decisions, so on and so forth. So this one is a pretty simple tip, and the way to action upon this is to really spend your time looking over your data, looking over your past trades, looking over historic trades that you haven't taken yet, coming to realistic, sensible data-backed conclusion as to what your probability of winning and losing is, and then applying this going forward. You'd be amazed how many people have no idea what their probability of winning or losing is, or whether or not they've even been profitable for the last few years, yet they continue to do the same things blindly. It'd be like going to the gym as a bodybuilder for 4 years, but not once looking in the mirror or seeing if anything you've been doing actually works, and continuing to do the same workouts without that sort of insight. It doesn't make any sense, does it? The next tip is to really detach yourselves from unrealized profit. Unrealized profit is a position that is worth a certain amount, but it's very volatile. For example, say you entered a very low cap coin and you're up a huge amount, 6 figures. You're up $100,000. And I knew stories of people who were up 7 figures in 2017. Until you realize that profit and reduce its volatility, it does not exist. And the riskier the asset class, the less it actually exists. It's very easy to look at that number on a piece of paper and think that that is yours. What this ends up doing is misleading you, because when your profit drops and instead of being 100K up, you're now 50K up, you won't take profit, because you think that you had 100K previously and now you only have 50K. And this is how the domino effect unfolds. Basically, you see your 50K, then that goes down to 25K, and instead of taking profit, maybe you put some more money in. Now you're down to 0, then you're actually negative and you end up becoming a bag holder. So taking profits regularly with predefined targets, as we've said before, is really important. If you don't take any profit, you're either someone who has a very long-term time horizon, or you're setting yourself up for failure. Don't be like the countless people who had life-changing money in 2017, but didn't change their lives, so they had to start from scratch. It can be emotionally extremely challenging, and hopefully no one listening to this podcast ever has to go through something like that. My final point will be, following on from the previous one, to take money out of your trading account. There are hundreds of ways to make money, and you need to reduce your exposure to just one source of income or one market, especially when things are as parabolic as they are now. This sort of move is unsustainable. It will not last forever. By all means, be bullish on Bitcoin. I do believe that we will absolutely, within the next 10 years, go far beyond $100,000 on Bitcoin. But that doesn't mean I can't invest money elsewhere. I can't invest in my own education, my own businesses. You don't necessarily have to reduce your risk through diversification. You can actually put your money into other risky ventures that you are passionate about and you think will do well long term. Remember, trading and investing, it's not just about the money, it's about what you can do with it. Another example would be to invest in your own time. Right now, if you don't like cooking, but you're still preparing all your own meals, what if you had someone who could prepare your meals for you, or you order from a meal delivery service, and now suddenly you've opened up more of your time and you have more time to make money or pursue whatever you're passionate about. Invest in mentors to teach you things. And that really wraps it up for this episode. Overriding actionable insights would be, remember, trading crypto can produce huge gains. However, it can be equally destructive. If you use the 7 tips I've given you right now to remember to take money out of the market occasionally, put it elsewhere. You don't have to reduce your risk. There's lots of things you can invest in. Remember to have a plan and really take your time to do your due diligence. I think you're going to make it out of this market a lot better than when you first went in. That's everything from me, and I hope you enjoyed this episode, and it's going to help you build wealth, not just this year, but for the rest of your lives. Thank you so much for tuning in to another episode of the Market Meditations podcast. If you enjoyed this episode and you'd like us to continue bringing you fascinating people from across the world, please leave us a review on Apple Podcasts, Spotify, or wherever else you like to listen to these podcasts, and share the episode with a friend. If you have feedback or an idea for a potential guest, reach out to me on Twitter at Koroush AK, and do not forget we write a newsletter covering all important topics in crypto and traditional markets. We send it out 3 times a week. The Market Meditations newsletter. You also get early access to these episodes, and you get transcripts and extra notes as well, so make sure to subscribe there as well.